I'm the head of the corporate M&A department of Çiftçi Law Firm and have been involved in M&A deals for more than 25 years, including major M&A deals in the energy sector. It is really sad that we are unable to meet in person, as these conferences give us a great opportunity to meet with many sector players and our friends and exchange views on the sector, as well as discuss about opportunities. However, thanks to this digital platform and our organizer, EEL Events, that we are still able to discuss about the energy sector with many experts in their fields. As you may all know and discussed in previous panels, despite COVID, there were major developments in the energy sector, and the sector has continued to pace in Turkey. We have seen various new deals and significant regulatory developments, which reveal new market drivers and trends, as well as new investors, which we will discuss today. So today we have a wonderful group of experts in their fields in Turkey who will share their views around market trends and drivers, investor sentiments towards future of the sector and opportunities in Turkey, as well as insights into the legal aspects of energy developments. So on the panel with me, I have Okan Çolakoğlu, the Vice President of İş Investment in Corporate Finance. Okan is an experienced investment and strategy professional with more than 10 years of experience in the investment banking, private equity, management consulting, and corporate strategy. He has experience in different sides of the table, such as corporate investment banking, private equity, and management consultancy. As an investment banker, he has been involved in various M&A projects, representing either buy side or sell side and public offerings in renewables, distribution assets, fuel distribution markets. He is also an investment professional on energy venture capital funds of İş Group, and hopefully we'll hear more about the investment trends of these funds. We also have Çağrı Cem, who has been with STFA Yatırım Holding for 10 years and is the Chief Legal Officer for the last 3 years. Çağrı is a lawyer by profession, and he coordinates investment processes of STFA in the energy sector from a legal perspective, and has taken a lead role in various sell-side and buy-side deals of the group. We will also have, Aydın Özol from Raiffeisen Investment Turkey office. He also has more than 20 years of experience, but perhaps I can introduce him when he's able to join us. And finally, we have Deniz Göçük with us. Deniz is a senior associate in corporate and M&A department of Çiftçi Law Firm. She has 10 plus years of professional experience and has been working with the firm for around 7 years. She also has substantial experience in the energy sector while advising both international strategic clients and financial institutions in relation to their energy investments in Turkey. Her experience in the sector involves companies active in renewables, electricity distribution and supply markets, natural gas distribution, and electricity trading. All right, I think Aydın is joining us now. So this is unfortunate. Okay. Hello. Hi, Aydın. Welcome.
Hello.
Hi. I had just finalized introducing all the other panelists, so let me introduce you while you have just joined. Aydın is an executive director of Raiffeisen Investment Turkey office with more than 20 years of experience in the sector. Currently, as an executive director at Raiffeisen, he's focusing on power and utilities and infrastructure M&A advisory. Prior to Raiffeisen Investment, he worked in the investment banking department of Raymond James Financial in Turkey. At Raiffeisen, he built and led the practice of power and utilities M&A in Turkey and advised many local and international clients, as well as the Turkish Privatization Administration, on various M&A deals. Aydın also has extensive experience in debt restructuring, project finance, and structured equity products. So let's get started. I would like to start with Okan Bey. Okan Bey, given the recent regulatory and sector development, how do you see current market drivers and trends in renewables, electricity gas distribution, and fuel distribution sectors?
Thank you very much, Tranum, for the question. Starting with the electricity generation, especially renewable ones, there are some growth stories with the continuation of growth stories. Let me start with the mini YEKA tenders, which will be postponed in the first quarter of this year. And thanks God, the last week there is a new legislation for the explanation of pricing escalation for the mini YEKA tenders. It was very important for the creditors and investors. How will we define the pricing escalation of the mini YEKA? So as we see the formulation, there is a weight more than 40% on a fixed basis. So it gives more comfort to both creditors and investors compared to TOT's previous month. This is the one issue that we can highlight for the continuation of the momentum of the renewables. The second one is actually the first one is the catching the deadline of the first YEKDAM in the following months, which some of the assets within this context will be expected to be M&A tables in the next year. After starting to benefiting the end of first YEKDAM period. So this is these are the two main growth path for the renewable side. On the next YEKDAM mechanism that was discussed in previous panel today, there is also expectation on what will be the benefit, what will be the pricing formulation for the next YEKDAM period. As we see mini YEKA pricing formulation, so there can be more comfort on the expected YEKDAM mechanism as well, in order to weight of FX in the price basis. And on the creditor side of the YEKDAM mechanism, we can say there is no matter the price basis in TL or USD. The point is the basis of price should have a price floor in creditors' perspective. So as we see on the mini YEKA tenders, we can wait for the future improvements for the clarification of the pricing of a new YEKDAM mechanism. And the third one is recent regulations that allows hybrid generation for the existing sites, which gives an organic growth, let me say, organic growth for the existing sites, and it increase the activity as well as the M&A activities of the market, because there is no license requirement for the hybrid generation, and the investment cost per megawatt is lower than compared to investment standalone, and there is of course operational synergy on the OPEX side. So this hybrid generation gives more value and in terms of increasing capacity and value per megawatt as well in the market. And the last thing on the generation side we can discuss, of course, decreasing availability at project finance. Even we have improvements on mini YEKA tenders and expectation on new YEKA pricing mechanism. In globally and in Turkey, there can be some less comfortable environment in terms of project financing availability compared to previous years. So in investors' perspective, we can say these are the main pillars to highlight the market in generation side, especially the renewable side. On the distribution side, let me start with the electricity distribution. In the previous year, we experienced decreasing real regulatory WACC return, which is direct link on the profitability and the return of the electricity distribution as well as gas distribution. So we can expect also some decrease on the regulatory WACC on the gas side, gas distribution side. And on the electricity distribution side, the decreasing eligibility limit increase the procurement side of the electricity retail companies, and which gives more margin, more sales margin to the shareholder level, and compensate the negative effect of the decreased WACC as a group level. On the gas distribution side is a little bit more, there are more activity in terms of M&A deals. As we saw in the previous years, there were some exits from the market, and let me say EWE case and recently NG case are the main examples in order to get some feelings about the gas distribution market. What are the drivers for this market? I can actually say increasing barriers to be able to leverage synergies in intra-group activities may be less comfortable for the shareholders compared to previous years, which can also trigger some activity in terms of M&A or other financing alternatives. So, and also for both electricity distribution and gas distribution market, even the revenue requirement or revenue mechanism is TL based. Due to lower interest rate, many of the distribution companies has a fixed denominated debt. So this fixed denominated debt makes diminishing profitability in their P&Ls. So and also the decreasing availability of project finance, which is also direct link to increasing asset base of the distribution companies. The next tariff period starting from the next year, the companies will focus on the optimization of their capex programs rather than maximization of their capex programs, which results less momentum in increasing asset base, which will in order to manage their cash, in order to manage their capex, which will lead in terms of valuation perspective, there can be more opportunity for the next buyers or for the next shareholders in order to leverage synergies, in order to get return from the capex, unutilized capex in the following periods. On the gas market side, I will say just 3 or 4 bullets. First one is, as we all know, the current opportunities in Black Sea, which amounting more than 400 BCM in total, gas exploration activities, which will increase Turkey's stand in the negotiation table in this year. This year is important for the termination of gas contracts with Russia, Azerbaijan, and the LNG from Nigeria, totally 16 BCM. So these positive improvements on the gas supply side will also affect to electricity market and the players' situation in the market, because if there is a positive effect on the natural gas supply, the CCGTs also has a positive hand in their strategy, in their debt service calculations, etc. And the last thing for the gas market is a small but respectable effect is gas futures market. In this year, it is expected that gas futures market will be inactive, which also gives a very important tool for the CCGT players to be able to calculate the light at the end of the tunnel in terms of possible restructuring. So gas futures markets in this point is important, not for as a gas user, but specifically for the CCGT players. And the last thing, the last pillar of the question is fuel distribution side. I would like to say there were some deal package in the fuel distribution side, especially the acquisitions by OYAK and re-entered to fuel distribution market after some years. by acquiring Demirören site. It can be asked that this deal package, more than 400 million USD, a deal size, is this a signal for consolidation or not? Personally speaking, it is not. It is very early to say the consolidation signal, because the market in total has a oversupply issue since 15 years. So the growth will be not company basis, but the station basis. So in the following years, I'm not expecting the consolidation, but I am expecting the downsizing and indirectly consolidation, not increasing the station, but the changing station brand in the same level. So this is the general picture from my side.
Thank you. Thank you for the very detailed explanation on each of the sectors. Now that you have mentioned about gas distribution and the deals around gas distribution, we have Çağrı Bey with us. STFA Group has just signed a deal for the sale of Enarya Enerji shares, which is a major gas distribution company authorized to distribute gas in 10 cities in Turkey. And the deal was developed and signed during COVID-19 outbreak. And Çağrı Bey, you also have a minority stakeholder, which is a prominent global infrastructure fund. How would you describe this recent experience when compared to the former M&A deal, deals that you have done with STFA Group? And do you think COVID outbreak had any impact on this deal, and how?
Thank you very much, Hanım. Good afternoon to all my esteemed panelists and to the guests. I believe Okan Bey made a very detailed introduction to the matter. Of course, I mean, starting from the COVID issue, maybe this year it was a very busy year for STFA, especially for the sale of Enarya Enerji, as you have pointed out. But of course, the COVID-19 issue, I think it created the thing that the lawyers, we have 3 lawyers here on the panel. So the one thing that we dislike the most in terms of deals and M&A transaction is the uncertainty. Even if, when we are discussing the terms of a share purchase agreement, we always refrain from having any kind of regulations which creates any sort of uncertainty. But this COVID-19 alone has established a very major uncertainty, not in terms of course, the deals, but also generally on the economical view of countries. So from that aspect, inevitably, the COVID-19 issue affected the deal itself, and most probably, if there was no such issue in place, then the risk appetite of investors, especially the foreign investors, would be higher. So we have engaged, as maybe some of the guests already aware, STFA has engaged with an investment banking in order to market the portfolio and coordinate the process. At the beginning of the phase, actually, it was our expectation to have more foreign investors interested in the asset. But as Okan Bey rightfully pointed out, even before the COVID-19 issue, there was an exit trend from the gas distribution at this sector, or the energy sector generally in Turkey. So, I mean, also following up with COVID-19, we couldn't see the appetite or interest coming from foreign investors as much as we like to have. We still did some investors coming and making their due diligence and maybe bidding for the asset. But normally we would be willing to see investors coming from more regulated countries like European countries. I believe the trend in Turkey for the time being is sort of the investors coming from either Far East or maybe from Middle East. So their risk appetite is definitely higher than those coming from the regulated markets, obviously. So that to that end, I believe the deal is, I wouldn't say affected, but on the deal process as a procedure, I believe we could have more potential investors than we have in place for the time being. Anyways, there has been a huge interest from the domestic market, so which was a good trend for us, obviously. So eventually we have signed a share purchase agreement, which is now public, with the Turkish investor. So we are trying to close the deal, and we are on that path, I believe. But of course, throughout that process, there had been many problems with the financing side, mostly for the investors. That was an uncertain matter for most of the investors as well. So, anyways, being I think a reliable asset, Enerya now is in the process of sale, and most probably it will be complete in the upcoming weeks. For the COVID issue, I mean, I don't know, maybe my colleagues from investment banks can comment better, but this is at least our experience. And on the, I mean, the other point related to the how did the investments of STFA has changed over the course of past years. I'm together with STFA Group for 10 years now, and we've been always bidding for different projects in the energy business as well. Although we are mainly a construction company, the view of our shareholders has always been to invest in the energy business as well. Last year, we exited from one energy project, which was a renewable energy project. And even that time, I witnessed that the appetite coming from the foreign investment side was less than 5 or 6 years ago. So when I think in 2014, when our private equity shareholder invested in Enerya, that there was a very good environment for the foreign investors to come and invest in Turkey. The return rate and the predictability was at the highest level. But of course, there are many developments, as you may all know and appreciate, in the past 4 or 5 years in Turkey, led by mostly political climate and also the financial fragility that the Turkey has gone through with the devaluation of Turkish lira against foreign currencies. But where we are standing now, I believe, as Okan Bey pointed out, there's a tunnel, so we are in a tunnel, and there's a light at the end of the tunnel, as Okan Bey pointed out. Some say it's a light of a shiny day. Some say it's a light of a train coming towards us. Me personally, I'm on the optimistic side, to be frankly speaking, because as we are getting used to the new normal after COVID-19, I think Turkey is also generally trying to get used to with the new normal trends in Turkish economy as well. And I believe with the steps to be taken in the very near future, we will have a better understanding. But my point of view is we will have a better year in the upcoming years than 2020 or generally in the from the years in the past 4 or 5 years. So that's all I can say about the trends that we've gone through in STFA.
Thank you very much. This was very helpful. I mean, very live experience, very recent experience. Now, Aydın, up to you. I think, I mean, we have all heard about exit trends that the previous panelists have mentioned. And as an experienced M&A advisor, and taking into account the recent legal and sector developments and the impact of COVID, how do you see the evolution of energy M&A deals in Turkey? Hopefully you look at it from an optimistic perspective. So what made this market so interesting in the past, and why do you think, whether do you think it's still worth investing?
Thank you, Ilter. And hello, everybody. I'm delighted to be here. Çağrı Bey, congratulations on the signing of Enerya. I mean, it's very interesting for us to see the Enerya deal, because we were the original advisors to Global Investment Holdings when they sold their stake to STFA and Partners Group back in 2012. So seeing that deal completed makes us also happy. As you said, I mean, it was a very different environment then. So I will take where Çağrı Bey left the conversation. It was a very different environment then in Turkey. First, the regulatory framework was very visible, and there was a clear market structure and market direction. First, Turkish power market was growing in every sense. I mean, it was the fastest growing market in Europe. We were the 7th largest power market in Europe, and maybe the fastest growing as well at that magnitude. And we had a very clear policy of privatizations and the liberal market structure. So BOTAŞ was going to privatize, distribution companies were going to privatize, and there was YEKDEM in place, and more generation assets will privatize. So there was a framework and market structure where a liberal market was going to be in place. So we were able to execute half of this market structure. So distribution companies were privatized, somewhat generation was privatized, but at the end of the day, BOTAŞ unbundling did not take place, gas market privatization did not really happen, and in the end, we are in a semi-liberal market. So Turkey could not deliver what it promised to the investors, a long-term liberal and functioning market for power and utilities. So basically, all the bets that were done by a lot of investors, a lot of foreign and local investors, was for the sake of being a player in a liberal markets where market forces were the main driver of who is going to win and who is going to fail. And there was a very well-structured long-term policy at that time, and government was pushing this policy through introduction of YEKDEM, 10-year tariffs, and policies coming to the market, privatizations being enforced. So basically, everything was going in place, and Turkey was an example. I mean, we do advisory in 15 countries in Central and Eastern Europe, and in our internal organizations within our company, we were presenting Turkey as a case study. I mean, a real success story. And in 15 countries, people were asking, and their privatization administrations and even their regulators were asking questions to us on the Turkey success story. But now we have a half functioning, half liberal power markets, which is still kind of not liberal. So operating in such an environment is very difficult, because then the long-term predictability is not there. The global forces which shape global markets do not 100% reflect to the Turkish markets. So it's a different market than what was promised. And if we look forward again, I mean, if I was going to invest in the Turkish market as a foreign or local investor in power and utilities, where the returns are typically long-term. So if you're investing in power and utilities, you should be a long-term investor. I mean, you should be looking into the returns after 7 or 8 years of that retirement and so on. So basically, that long-term visibility is very core part of investment in power and utilities. And currently, looking at YEKDEM, for instance, looking at the tariff structures, looking at the market structures, it's not there yet. Still, you cannot see what's going to happen in 10 years, and you cannot calculate your returns on the risks that you are taking. So that is one part of it. I mean, a solid long-term policy has to be introduced looking into 10, 20 years, which was the case, by the way, in Turkey. It was the case 10 years ago, and you could really come up with a calculation on your YEKDEM for distribution companies. You could really do those things. And also, the policy, that 10, 15-year policy, should have some anchors. I mean, anchors meaning that your carbon footprints, your generation from coal, your exposure to renewables, distributed grids, and you should be saying that in 20 years, in 15 years time, we will be there. So you should lead investors in the direction that you want to go. I mean, you should have solid statements, solid targets, and solid policies going to that target. Currently, we have some of those. So I mean, Turkish policy is still better than a lot of countries in the region. But compared to some other countries, we are still lagging behind. I mean, things are changing very rapidly in the world as well. So while people are planning and trying to come up with policies for the change which happened 3 years ago, you see the cost of generation going down significantly on solar generation, so that you have to change your long-term goals in order to cope up with what's changing. Also, natural gas prices in the world, LNG availability in the world, it's changing so much and so fast that you have to, at the same time, be flexible to adjust to those changes, but also keep with the long-term goals and long-term policies. So that is in a broader sense what the situation is with investor appetite and where Turkey is in the broader scheme of things. On the M&A side, I mean, what I can say is that if the market is not growing as much as the investors want to grow, so I want to grow faster than the markets, there is only one option for me. Either I go to another foreign country, another market, or I buy someone in my current market. That's what's happening in the Turkish market currently. I mean, there are some players who are willing to grow faster than the market is. So their greenfield projects are not enough for them to satisfy their growth targets. And there are some players who want to exit from the Turkish market or capitalize their investments. So that's the main driver of the M&A that we are seeing in Turkey. We signed a renewables transaction in Turkey exactly of this nature. A foreign company was selling their wind park, 60 megawatts, and a very large local company who wants to grow in Turkish market has signed it. And also, as Çağrı Bey and Okan Bey mentioned, the other transaction that happened in the past, the locals who want to grow further, or the existing players who want to grow further and faster than the market, are buying more share. Also, it makes a lot of sense because naturally, I mean, the characteristics of these markets globally are very consolidated. I mean, power and utilities are maybe one of the most consolidated industries in the whole world. In Turkey, on the generation side, it didn't happen like this. So we have a very fragmented generation world. A lot of companies having small capacities, and eventually they will have to consolidate. So I think the current environment is the perfect environment to push this consolidation. And I think public forces, government, and Turkish banks can also help this consolidation, because we know that there are problematic loans, problematic groups and companies on power and utilities. So I think Turkish banks also help with the consolidation. When they are restructuring these companies, they can come together. They can come together with the regulators as well, and start a consolidation as we had with the banks in 2001. I mean, after 2001 liquidity crisis, Turkish banking industry was consolidated significantly in four years. So we had a lot less number of banks compared in 2004 compared to the year 2000. So it should be the same thing in Turkey, and the regulator and Turkish banks help to happen. So we are also telling our clients and presenting them with different ideas how to play this consolidation, but it is inevitable. I mean, in next 10 years, there will be less generation companies in Turkey with higher capacities. I mean, it is going to happen, and the bigger companies who want to play a role in this game are already starting to consolidate. So other things in terms of long-term visibility, as Okan mentioned, YEKA tenders are very important. Structuring the right YEKA tenders on long-term planning is very important for the new renewable capacity coming to the grid. I think our natural gas policy, as natural gas is the marginal price maker in the Turkish generation merit order. So long-term natural gas policy is extremely important for the Turkish market. And if Turkey is going to buy and rely on pipe gas from Russia and from long-term contracts, or Turkey will allow significant amount of LNG, spot LNG and spot global natural gas to the market, is very important. And those two things will basically create the merit order in Turkey in the next 10 to 15 years. So if I am a natural gas player, if I'm a coal generator, if I am a merchant renewable player, I have to know what will be the marginal cost of generation in Turkey in the next 10 years. And that is primarily driven by natural gas. And I should be able to calculate the risk that I'm taking. Is it the pipe gas from Russia or from other countries, a long-term contract, potash contract, or can I hedge my risk with global LNG prices and whatsoever? So basically we will see those long-term important things coming to picture in the coming months, hopefully. And as those long-term anchors and long-term policies are going to be key drivers of long-term investment in Turkey. And also, I personally think that Turkish government regulator should introduce some kind of new benchmarks, qualifications to push the consolidation further on the generation side. So in a nutshell, I think Turkish market is still one of the fastest growing markets in the world in terms of power generation. We are 7th largest power country in Europe. So Turkey has always the potential. Turkey is still a very important player for power in the world. We're in the crossroads of all commodity power transits in Turkey. So basically, with some regulatory visibility, we will see more deals and more investment coming into the market. Thank you.
Thank you, Aydın. Thank you. This is very helpful. Actually, I mean, despite, various hurdles and volatility that we have in Turkey, there is still light at the end of the tunnel. But I would like to pass the word to Deniz now. Deniz, you have represented both buy-side and sell-side investors in major M&A transactions in Turkey. Can you provide some insight into the legal aspects and issues that typically arise in energy investors, so that our audience are aware of, the legal aspects of M&A transactions in Turkey? Apologies, we are really running out of time, so the first round of questions has taken a lot. Deniz, after you, we'll probably have to wrap it up as quickly as possible for the second.
Okay. Thank you, Tren. So basically, what we observed during the energy M&A transactions is essentially 20% of the legal issues are specific to the deal, whereas we see that almost 80% of the issues are standard for most of the acquisitions. This means that, unfortunately, most of the issues that we encounter during the M&A transactions are very much standard to the market, that arises from the same same legal regulatory issues that are existing in the market. So, as Çağrı Bey has also mentioned, from a lawyer perspective, the standard issues, as regards the standard issues, the biggest legal challenges are created by uncertainty and the time required to mitigate or at least manage the risks arising from those uncertainties. So it is very imminent for the Turkish practice and the market to the extent possible to avoid those uncertainties and to have a more clear legal and regulatory framework. Of course, with the same token, the industry participants and stakeholders are faced with changing legal and regulatory framework because the government, the policymakers are of course trying to address the concerns of the investors. And surely some of these changes help to overcome the legal issues for the investors. For example, one of the important issues in the M&A transactions was the various prior authorizations required to consummate a transaction, and the most important one was the EMRE approval, the approval that was required for transfer of shares exceeding 10% or more of a share capital in the company, or any transfer of shares that result in change of control. So very recently, the government, they no longer require an EMRE approval for the share transfers occurring in a generation company. I think this is a very good development, which I'm sure the investors will be happy about, because now the deal time is certainly expedited for generation companies. So we are, and the investors are looking for similar improvements in the legal framework. In addition to the prior authorizations, I think the duration of the permitting procedures in the regulatory framework has a very negative impact, again, unfortunately, in the Turkish energy market, because we've seen that sometimes the EIA process, the environmental impact assessment process and the other permitting processes take up to 2 years for a project, for a development project, which is a huge timeline. And of course, this results in a cost overrun and delay, a significant delay in the investors' projects. And as such, they are hesitant to enter into market to develop a project. I mean, this is specific to the development of the projects, but on the other hand, of course, transmission or distribution business also presents a very different risk profile, which is generally attached to the regulated tariffs, which are regulated by EMRA for 5 years. So there is a different risk profile for them and a different risk profile in terms of permitting timeline for the development stage process projects. And finally, I think I would call the land usage rights as another area of legal issues in the Turkish projects, because unfortunately we experienced that obtaining the necessary usage rights from the authorities, be it an expropriation process or execution of a servitude right agreement with the Treasury, this takes a considerable time. And unfortunately, sometimes investors, despite their efforts in years, they are unable to complete the process. For instance, we've seen projects that, I mean, after 5 years, 6 years, there is still not a servitude right agreement executed with the Treasury, and this causes a major risk item to the foreign investor, because they don't know, that there is an occupancy fee risk attached to the relevant land. Although this would be limited to 5 years, the past 5 years of terms, this is still an uncertainty and a huge risk for them. So basically, I think, as I see from other global forums, this regulated sector, such as energy, has its own uncertainties and complicated licensing procedures, which should be simplified to attract more foreign investors to Turkey.
Thank you. Thank you very much, Deniz. Unfortunately, in the first round, we ran out of our time, so I would kindly ask our panelists to wrap up with a few sentences only. I don't think we would be able to cover all the questions that we have discussed. Deniz, the back way around, actually, I would like to start with this environmental social governance issue, ESG.
Yes.
So that has quickly risen to the top of the board agenda globally. And the failure to address those have significant impacts on companies. There are new standards, new requirements across the globe in relation to sustainability and ESG reporting. How do you see that? I mean, these new trends, these new global trends and requirements would have an impact in the Turkish investment environment on the M&A structure. But
Sure. Yes, Tirem, I think that's an important point. I mean, even before the COVID-19 outbreak, the hit, we've seen, we were already seeing strong sentiment towards ESG investment globally and in Turkey as well. Especially the sophisticated institutional investors were very much concerned about the environmental, social, and governance performance of the companies. So now they are not only assessing the company's performance on financial basis, but there are non-financial standards which are really very important for them. And I think this trend will continue. So this is a trend to stay in Turkey as well. And in order for the Turkish companies to be able to attract more foreign investors, I definitely agree that the Turkish companies should build more strong connections between financial and non-financial performance.
Right. Çağrı Bey, all the panelists talked about restructurings, consolidation in the sector and their expectations in the coming years. How do you feel around those observations? And do you feel the same pressure actually for the sector?
Yeah, I believe it's inevitable, frankly speaking. I mean, both financial restructuring and also the corporate restructuring as well. I mean, by saying corporate restructuring, of course, the there might be new investors again rushing into the market, and with that new investments coming here to Turkey, especially from foreign countries, like foreign investors, they always would be willing to have some sort of local knowledge in the company itself. So in that sense, once the foreign investment begins to run into the market, I believe in that end, there will be a restructuring on the management and the shareholding schemes. For the financial restructuring, again, going through this COVID-19 issue, I think for most of the enterprises, it's maybe not impossible, but very, very difficult to manage without going through restructuring processes. So inevitably, we will see more and more in the upcoming year, I believe.
Thank you very much. Thank you. Aydın, back to you. You also talked about consolidation expectations. How do you see a change in the investor profile? Investors coming from abroad, regional changes. What should we expect in the coming years in the sector in terms of M&A transactions again?
Thank you. I think the existing players which are in top 10, 15 are going to be the main consolidators. Also, a recent change in the Turkish Capital Markets Board, which gives some tax incentive for distribution companies going public. So I think, like all the global markets, public markets will be an important factor into the Turkish consolidation. The companies will need more equity and more equity and more equity for the consolidation, and tapping into one's resources of any company in Turkey, this is too much of a burden to carry. So I think Turkish Capital Markets Board and Turkish İMR and Ministry of Energy are trying to provide some inroads of public markets and public money flowing into this consolidation. I think which is a very smart move, and I think it will pay off in the future. In the meanwhile, I think a framework for restructuring has taken place, but we haven't seen a real restructuring so far. Still, the restructurings are like debts, holidays, and refinancings, and not, giving a significant room to breathe to companies, and reducing their debt burden to a level where they can operationally carry. So I think that is also important. So when these two combine, there will be a lot of players who will go and consolidate. But in the meanwhile, on the debt side, the banks need regulation. The capital market side is taking place. Eventually, it will happen.
Thank you very much. Okan Bey, last words to you. Actually, we were, expecting to talk about İş Yatırım being more active in the energy sector through their funds, energy investment funds. But I guess, we don't have sufficient time to go into the details. Especially based on İş Group's investments, the fund investments in the energy sector. How would you describe this 2021 and 2022 on M&A deals in Turkey?
Let me answer in a very fast way. Actually, as we know, the diversified investor base in the market we are seeing. So, Energy Venture Capital Fund is one of them. And as İş Group, we have completed last 3 years 3 different deals for each year with a capacity of more than 140 megawatts. Which is very important. Why energy VC funds will be usual suspect in the market and on the M&A tables is this. The first reason is this: the bridge between creditors and investors. Energy VC funds will be financing a part of a partner for the investment. And the second one is coming from the private pension funds, which is very dramatically increasing in the market. So the alternative investments will increase, and the energy VC funds under the alternative investments at the asset management companies will have a tendency to invest stable cash flows, USD basis investments such as renewables, as we know. Then specifically for the wind power plants will be for the energy VC funds, renewables will be usual markets for them, And as Aydın Bey stated, the consolidation on top of that will also expected. As an energy VC fund, and the consolidation of the market coming from the top 10 players as strategic investors are the main pillars or main spotlight we will continue to see in the following years, starting from this year as well from İş Group.
Thank you very much for the time. I think it has been an incredibly interesting and helpful session, giving insight on energy M&A market in Turkey and our expectations. Hopefully the audience has learned a lot as well, and it has been an enjoyable experience for them. Once again, thank you very much for your time on the panel and giving your insights on this matter. Thank you.
Thank you.
Thank you. Thank you.
Thank you.